video is still on chapter 6, but we're on the LIFO portion of your handout. So if you turn to the second page or the page with LIFO, I simply cut and pasted this on top so your handout does not have this little box up here. I just wanted you to see what we're working with as we went. So we did FIFO. FIFO was first in, first out. So of our inventory balance under FIFO, we're always working from the top down. With LIFO, last in, first out, you're working from the bottom up. The theory behind LIFO is that it more accurately matches. So if your sales are at the most recent selling price, then your purchase ought to, or your cost of goods sold ought to be the most recent purchase. And so proponents of LIFO say it kind of reflects the matching better. Those who would argue that that's a flawed logic because they say you do that at the expense of your balance sheet, because theoretically on LIFO, if I never sell this $20 one, I could have these on there for decades, because if I never get down to selling them. So anyway, just a couple things to remember about LIFO is most of the world follows international financial accounting standards, and international financial accounting standards do not use LIFO. So this is kind of unique to the United States. Also, tax laws allow LIFO, and you're going to find out that a lot of people use LIFO because it results in lower net income and therefore lower taxes. So LIFO is certainly widely used for tax purposes because the IRS allows it, and the IRS and people want to pay less taxes. Remember, the government allows some things that might not make sense because they have other purposes. So for instance, you may say, well, why would the IRS or the federal government, which Congress passes the law that allows them to use LIFO, why would they do that? And sometimes what allowing more deductions means is that people buy more. So if you can use LIFO, that encourages you to buy more. So if you buy more, it stimulates the economy. So we certainly probably, if these are $20 and were bought 40 years ago and now the price is $70, probably don't want to erode that lower layer and end up with very high net income. And so we will always make sure we buy more. And also you kind of sometimes don't want to go out of business, because if you go out of business and you're selling them now for $200, I would rather not have a $20 cost that's 40 years ago cost against my $200 and pay taxes on $180. I would rather keep going, and if I'm currently buying them for $170 and selling them for $280, that's a $30 gain, whereas if I liquidate this old layer, that's a $180 gain. So anyway, there's lots of decisions made in businesses for tax purposes, and this is one of those. Okay, so let's really get into it. I'm going to make this a little bit bigger if I can. Okay, so first thing I want you to do is kind of go look at the FIFO one that you just did. So flip back to the prior page up here where it says FIFO. And what I want you to do is write down these journal entries with the exception of cost of goods sold. Okay, do not put the number down. But my point being, you're still going to have accounts receivable sales, cost of goods sold inventory, inventory accounts payable, accounts receivable sales, cost of goods sold inventory, etc., etc. They are exactly the same accounts. They are also exactly the same numbers except for this journal entry. Right here. This one. This is the journal entry that's going to differ, and the only thing that's really going to differ is this number, because which ones I sell is what's going to differ in these. Okay, so if you would go back to a couple of slides previously to, this is FIFO. Notice the numbers are the same. Now I get it, this 14,000 is the same, but we'll talk about that later. Don't put that down now. It's only a coincidence that it's the same. But every single one of these things is exactly the same with the exception of this number right here. So I've got 3 numbers that I don't want you to fill in. And then I even want you to go on to the average costing one, and I want you to do the same thing. Fill in the journal entries, and they're going to be exactly the same, but leave the cost of goods sold inventory out, because I really want you to see that everything is the same except for the cost of the merchandise that's sold. But I'm going to go up here under LIFO. Okay, so under LIFO, we're going to work from the top down and we're going to fill this out. So I start with 1,000 at 20, and that's all I would really fill out over here is 1,000 at 20, and then I sell 700 at 30. So I have two journal entries. So remember, 700 times 30 is 21,000. So I sell them for 21,000. Here, 360 times 30 is 1080, and 240 times 30 is 720. So I sell them for 21,000 for 1080 and 720. Okay, the sales price remains the same. So I can even go right down here and list my sales for the same amount they were under FIFO up here. So I believe you had 39,000 in there. Go ahead and just fill out 39,000 in sales here, and you can go to the average cost one and fill out 39,000 in sales there. Okay, again, the only thing that's changed are our identifications of which one we're selling, because we have mass numbers here and we've just got to come up with some reasonable method to identify which ones we're selling. Okay, so now I sell 700. Notice I only have one layer. So since I have one layer, that's the only reason this 14,000, let's get on LIFO, this 14,000 is the same as the 14,000 under FIFO, because I only have one layer. So my first ones in are the same as my last ones in. Okay, so last in, first out, the last ones that came in, generally I try to talk about them as their unit cost. So I'll say the last ones that came in are the $20 ones. Okay, so in this one, again, I would encourage you to say I sold 700. So I would encourage you to go up here and actually draw a line and put 700 there. And then I know I want to come up to 700. So I go back up to this layer and I say, okay, I need 700 of the 1,000. So all of them came with the $20 ones. So I have 700 at $20. And that equals the 14,000. Okay, so 1,000 minus 700 is 300 left. So put my inventory balance 300 at 20. For inventory balance, you honestly don't need to total it up until you get to the last box, because inventory balance is the balance on the last day of the year, so I can just multiply them out on the last day of the year. Then I purchased 500 at $22.40. So notice the journal entry is exactly the same as under FIFO, because I still purchased them for the same amount, so they go on my books at the same amount. And now I have two layers, the 300 at 20 and the 500 at 22. And here's where it's going to start changing between FIFO and LIFO. Now if I go to the next one, I sold 360 at 30. So this is the selling price. So after you make that accounts receivable sale using 360 times 30 of the 10,800, skip that $30. That's no longer important. Just a little colored out there. Okay, so what I want to know is which ones did I sell? Did I sell the $20 ones or the $22.40? Always go here. Okay, don't look back at this or you're going to get yourself confused, because some of these items are gone. So right now what I have on hand is 300 at 20 and 500 at $22.40. And remember, I'm here on the 22nd, so I want to add up to 360. Okay, so I look at these last in, the last ones that came in are the $22.40 ones. Okay, and so I sold $360 at $22.40, and 360 minus $22.40 is $140 left. Sometimes I actually put these down here so I can see the layer. The layer is 500, so I'll kind of put them across from these 140 at $22.40. Because of these 500, I sold 360 and I have 140 left. It's pretty important to keep the order in the same. You need the $20 ones first and you need the $22 ones second. Or $22.40 1 second, simply because I don't want to flip my layers and then the last ones that came in are out of order. Okay, so focusing right here, sold 360 at $22.40. 500 minus 360 is 140 left, and I have all 300 at 20 left. So right now, what my inventory balance looks like is 300 at 20, 100 at $22.40. So you're going to put that right over here. Okay. 360 times 2240 is 8064. So once I get the 8064, I can fill it in right there. That's my cost of merchandise sold. Notice the 14,000 goes up here. And again, the only reason this is the same as FIFO is because I have one layer. When we get to average, it's going to be the same too, because since I only have one layer, my average is the same. All right, then I had another sale. I sold 240. Clear this. So if I sold 240 on the 28th, again, I'm going to draw a line here and come down to 240. Okay. On my 240, I work on this one above here. So I'm looking at this one. Last in, first out, I sold 140. So again, I usually keep it in order instead of like they do. It doesn't matter. So I have 140 at 2240. Okay, and then I have none of those left. So I just draw a little line because I sold all 140 of those. Then I go up to this layer. I've got 300 sitting at 20, but I need it to add up to 240. So I need 100 of the $20 ones. And since I had 300 and I sold 100, I have 200 left. So 200 plus 100 is the 300 in that layer. So what happened to that layer is I sold some of them. I have some of them left. On the 2240 layer, I got rid of them all. So now my inventory balance is 200 at 20. So finish that, 200 at 20 there, and 4,000. Now I purchase more. I purchased 600 at 2330. I don't have that. I guess I had the compute column for that on the other one. Again, I don't always have that one. When I have the entry, you can kind of see it in the entry, and it's just easy to add over here. So now I have a new layer, and my new layer down here is 200 at 20, 600 at 2330. So on the last one, I need to add them up because I need the inventory balance on the last day of the year. So 200 times 20 is 4,000, so write that there. 600 times 2330 is 1380, so write that there. That totals up to 17,980, so right in here in ending inventory, put 17,980. Okay, your cost of goods sold, you can either add it up here, 14,000 plus 8064 plus 5136. You could simply add up this column, same number. So put 27,200 in there. And your gross profit is 11,800. So we'll do this, compare all of them at the end. Okay, so the last one I'm going to go to is average. Average is actually, the one is probably the easiest to understand. It's the most error prone, I guess, when students actually do it. So we'll pause it. Okay, so for this last one on average cost, I hope you have, as instructed before, wrote all these journal entries in here, but left the number out for cost of goods sold inventory. So you should have everything except for this 14,000, this 7740, and 5160. So go ahead and make those journal entries. All right, so first of all, we start out with the same 1,000 at $20 up here, and since we only have one layer, our average cost is $20. So when I sell 700 of them, I have 300 left. So the only reason these two lines are the same in every single one is because of the fact we only have one layer. If I had more than one layer, we would have different numbers for them. Okay, and then I purchase 500. So whenever you purchase 500 or whenever you purchase something, you're going to have a new inventory amount. Okay, so I'm going to pause here so I can type it in. So right now, when we purchase 500 at 2240, so hopefully you have the journal entry there, inventory and accounts payable for 11,200, and it's 500 at 240. So if you want to write that down here, you can know. But anyway, so we're going to, up here you should have written your inventory balances 300 at 20. So 300 at 20 needs to be written right up here in this box. Okay, I'm going to do it a little different than they do. I think you'll, they don't show the computations. I'm going to actually show the computations in this box. Okay, so right now our inventory balance is 300 at 20. and 500 at 22.40. Now I need to figure out what is the average cost. You cannot ever average 20 and 22.40. And the reason is because you have more items that cost 22.40 than you have at 20. So the average cost is going to be closer to 22.40 than 20. This is a weighted average, which means I don't have 2 items. I have 800 items, okay? And so I need 300 at 20, 500 at 22, so this is the total cost. So I want my total cost divided by my total units. So I have my total cost of 17,200 divided by 800 units. I have 2150 is my average cost. Okay, and so now in this particular one, I purchased 500, so I'm done there. So now, if you would like to, you can fill in this right there. So now what I have is I have an average cost of, let's see if I can get it in here, 2150, okay? So my cost is 2150. I fill it in from there, and what I'm going to do is I'm going to, those no longer exist. I no longer have 300 at 20 and 500 at 22.40. I simply have 800 at 21.50. Okay, and so now it suddenly becomes like the first layer. I only have one layer, 800 at 21.50. So please ignore these, and please know it's a weighted average, total cost divided by total units. So let's go down to the 22nd when I sold 360. So when I sold 360, it's pretty easy. All I need to write in there is I sold 360 at 21.50. I have 77.40 left, 800. So over here I sold 360. I'll let you write in 360 at 21.40 equals 77.40 in that box. So 800 minus 360. So over here I have 440 left. So notice these two numbers will always add up to 800. So I have 440. So fill in that box at 400 at 21.50, and then I sold 240 more. So again, I still have them 440 at 21.50, so I'm always going to look up here. So this is 21.50. So I'm going to sell them. They're either going to be gone or still here. So I sold 240. Remember, the $30 is the selling price. That's how I get the 72,000. I want to know what number to fill in for the cost. Okay, so a 440 is either sold, right, that number or that number. So 240 are sold, so 200 are left, and they're still at 21.50. So fill out 200 at 21.50 there. And 240 times 21.50 is 51.60. So that's where I get that number. Okay. So now we're going to go on to the next one. And again, I'm going to pause this a second where I type it in. So recall I've got 200 at 21.50. Okay, so remember I have 200 at 21.50, then I purchased 600 more at 23.30, so 600 times 23.30 is 13,980. So I have a total of 800 and a total cost of 18,280. So I take my total cost divided by my total units to get an average of 22.85. So now if I sell some later on, which I don't, by the way, I think I have this on the wrong date, move it down here. All of that, all of this goes down here. Okay. So if I sell them later, I sell them at 22.85. So I no longer have 21.50. I no longer have 23.30. I have the 22.85. If I could run this thing. Okay, so that number goes right down there. Okay. So now I'm going to fill out my little chart below. So my sales are still the same. My sales are still 39,000. I add up my cost of my merchandise sold, which is 14,077.40 and 51.60. That adds up to 26,900. My gross profit is sales minus cost of goods sold. That ends up as 12,100. And my inventory balance is 18,280. So if you look back on them for FIFO, LIFO, and average costing, you'll see that your gross profit is 12,280 for FIFO. For LIFO, it's 11,800. And for average costing, it's 12,100. So it's worth your time to actually write those out. The highest will be FIFO at 12,280. The lowest will be Lifo at 11,800. And the middle one will always be your average costing. And the reason is because Lifo is going to use these as cost of goods sold. FIFO is going to use these as cost of goods sold. The first ones in are the first ones out. Lifo, the last ones in are the first ones out. And average costing is going to be someplace in between. Okay, so that's FIFO, LIFO, average costing.